Welcome to the deep dive. Today we're going to be digging into Meta platforms, specifically their 2024 performance, based on that big Form 10K annual report they released.
Right, the 10K. It's always packed with detail.
Exactly. And we want to break down what really drove their year. We'll focus on their two big segments, the family of apps, FOA, and then the big future bet, Reality Labs, or RL.
Two very different stories there, really.
Totally. So the plan is to get you, our listener, quickly up to speed on those segments, the key financials, what they're doing for shareholders, and kind of their outlook going forward.
Sounds good. Yeah, the 10K gives us that real look under the hood. We'll try and pull out the really crucial bits for understanding where Meta was in 2024 and, well, where they might be headed.
Perfect. Okay, let's jump into the family of apps first. FOA, this is where, almost all the money comes from currently, right? Advertising mostly?
Yep. Facebook, Instagram, Messenger, the platforms most people are using daily. It's the core engine. And it's also where a huge chunk of their investment still goes, even with Reality Labs getting headlines.
So advertising revenue there in 2024. What did that look like? What were the big trends?
Well, the headline number is pretty strong. A 22% jump year over year. That took it to, let me check the figure, $162.355 billion, up from about $133 billion in 2023.
Wow, 22%. Okay, what drove that? Was it just more ads being shown, or were they charging more?
It was actually a mix of both, which is interesting. They saw an 11% increase in ad impressions. So yeah, more ads being shown. But they also got a 10% increase in the average price per ad.
Okay, so both volume and price went up significantly. That's quite healthy.
It really is. It suggests, strong advertiser demand and that their tools are working effectively.
Where did they see the biggest growth in those impressions? Was it spread evenly?
The report highlights Asia-Pacific and the rest of world regions. Seems like user growth and just general engagement are really picking up pace there. More eyeballs, more ad slots, basically.
Makes sense. And the price increase, that 10%, you mentioned advertiser demand, but was anything else helping push that price up?
They point to improvements in their ad targeting and, importantly, their measurement tools. Basically, they're getting better at proving to advertisers, hey, our ads work, and showing the right ads to the right people.
Right, proving the ROI.
Exactly, which means advertisers are, more willing to pay a bit more. They did mention the online commerce vertical was a particularly big driver for that revenue increase.
But it's not all smooth sailing, is it? The regulatory environment, privacy changes.
Oh, absolutely not. That's a constant factor. They specifically call out things like GDPR in Europe, CCPA in California, Apple's iOS changes, which were huge.
Yeah, the ATT framework.
Right, and Google phasing out third-party cookies. All of these things make that traditional ad targeting and measurement trickier. It's a definite headwind.
So even with this strong growth, they're kind of fighting against these external pressures. How are they trying to adapt? What's the plan?
Well, they're investing in developing new ways to do advertising that are more privacy-focused. They talk about working on open standards for secure data processing. It's sort of a necessary shift for the long term.
Interesting. Okay, shifting gears slightly within FOA. What about their investments inside this segment for 2025? Where's the money going?
Key areas they listed are, well, no surprise, generative AI. That's huge everywhere. Also, their discovery engine. Basically, the AI that shows you stuff beyond your friends, keeps you scrolling.
Like Reels recommendations and that sort of thing?
Exactly. Threads is still getting investment, trying to build that up and figure out monetization. And then the ongoing stuff. Platform integrity, safety, and just keeping the core infrastructure running and scaling.
So a mix of enhancing the core and pushing into newer areas like AI and Threads. And the cost of running FOA is pretty substantial.
Oh, huge. In 2024, about 79% of their total costs and expenses landed in FOA. That's $75.25 billion. Covers everything from headcount to data centers, just underlines the sheer scale of operating these apps.
$75 billion. Wow. Okay, let's pivot now to the other side of the coin. Reality Labs, RL. This is the metaverse bet, the wearables, VR, AR, all that future stuff.
Yeah, the long-term vision. And the investment numbers here are also massive, just in a different way because it's not generating profit yet. They spent $19.88 billion on RL in 2024.
Almost $20 billion, and that's what, about 21% of their total costs?
Roughly, yeah. So a significant chunk of their spending is going into this area that's, well, currently losing a lot of money.
And they're quite open about the fact that this isn't going to pay off anytime soon, right?
Very open. They frame it as long-term R&D, building what they believe is the next computing platform. They literally say it could take a decade or more to, fully realize.
A decade or more. It's a patient strategy. funded by the current success of the apps. But those losses,
Yeah.
they expect them to continue.
Yes, they state pretty clearly that Reality Labs' operating losses will likely keep growing, or at least stay significant for the foreseeable future. It's entirely dependent on the profits coming out of FOA.
So the core ad business has to keep performing to fund this metaverse stream.
Yeah.
What's the underlying belief? Why pour billions into something so far out?
The core idea is that the metaverse is the next step, the next chapter of the internet, moving beyond screens into more immersive, interconnected digital spaces.
And they see ways to make money there eventually.
Oh, yeah. Advertising within virtual worlds, selling the hardware itself, headsets, glasses software, digital goods, virtual experiences. They see multiple revenue streams opening up if it takes off.
If it takes off. That's the big question. What are the risks they acknowledge with RL?
Well, the biggest one is just market acceptance. Will people actually want to spend significant time in the metaverse as Meta envisions it? Then there's competition. Lots of other big players are interested.
Apple, Google, Microsoft.
Exactly. Plus, reliance on third-party platforms for some things, and the unknown territory of regulation, what rules will apply to the metaverse, nobody really knows yet.
So high risk, potentially high reward, very long term. Okay, let's pull back and look at the consolidated numbers for Meta overall in 2024, the big picture financials.
Right, company-wide. Total revenue hit $164.501 billion. That's that 22% increase we talked about, mostly from FOA ads.
And profitability, net income.
Net income was strong at $62.36 billion. That works out to a diluted EPS, earnings per share, of $23.86. Income from operations also saw a big jump, up 48% to $69.38 billion.
48% increase in operating income, wow. The operating margin.
That improved nicely, too. It went from 35% in 2023 up to 42% in 2024. So they weren't just growing revenue, they were becoming significantly more profitable on that revenue.
Okay, that's impressive. What about their balance sheet, cash position, debt?
They ended the year with a very healthy cash pile, $77.81 billion in cash, cash equivalents, and marketable securities. Long-term debt was around $28.8 billion.
So tons of cash on hand. And they're still investing heavily in physical infrastructure, too, right?
Yeah.
Capital expenditures.
Yep, CapEx, including finance lease payments, was $39.23 billion for the year, building out data centers, buying servers, especially for AI.
And tax rate.
Headcount. Effective tax rate was quite low, 12%. Headcount grew by 10% year over year, ending 2024 at just over 74,000 employees.
Okay, so summarizing the overall performance drivers. Strong FOA ad growth, both volume and price, user growth, better ad tech effectiveness, offset mainly by
those big operating losses in Reality Labs. FOA is carrying the company financially while funding the RL bet. Daily active people across the apps hit 3.35 billion in December 24, by the way, up 5%, so engagement is still growing.
3.35 billion daily actives.
Right.
Just staggering scale. Now let's talk shareholder value. How did they return capital to investors in 2024?
Two main ways. First, share repurchases. They bought back $29.75 billion worth of their Class A stock.
Almost $30 billion in buybacks. That helps support the stock price, reduces share count.
Exactly. And the second big thing, which was new for them, was initiating a dividend. They started paying quarterly dividends in February 2024.
Right, that was big news. How much did that amount to?
Over the year, it totaled $2 per share across 4 quarterly payments. That worked out to about $4.4 billion for Class A shares and nearly $700 million for Class B.
So significant capital going back to shareholders through both channels.
Yeah.
Is the plan to keep the dividend going?
Their stated intention is, yes, to continue paying quarterly dividends. But they add the usual caveat, it's subject to board approval each time, based on finances, cash needs, etc.
Sure, standard practice. But it signals a shift, balancing those huge future bets with returning cash now. Okay, looking ahead then. What's the outlook for 2025 based on what they've said?
Well, the focus remains on those key investment areas we mentioned. AI, discovery, metaverse wearables, threads, monetization, safety, infrastructure. No big strategy shift there.
Specifically for Reality Labs.
They explicitly expect operating losses in RL to increase in 2025. So they're doubling down on that investment, not pulling back to spec the losses.
Okay, losses increasing. And what about overall spending? CapEx.
This is a big one. They're guiding for capital expenditures between $60 billion and $65 billion in 2025.
60 to 65 billion. That's a huge jump from the roughly 39 billion in 2024.
It is. They say it's to support the core business and, significantly, their big push into AI infrastructure, building out the capacity they need for these advanced AI models.
So AI is driving a massive spike in infrastructure spending. What about the tax rate for 2025?
They're projecting an effective tax rate in the 12% to 15% range. They note it could be affected by things like share-based compensation taxes and rules around capitalizing R&D expenses.
Understand sort of changes there.
And the regulatory stuff isn't going away.
Not at all. They acknowledge they have to keep navigating privacy laws, digital market regulations. It's just part of the landscape now and could always impact the ad business.
Yeah.
Plus the usual risks: competition, security breaches, economic downturns, government actions.
Right. So wrapping this deep dive up, Meta in 2024 showed really strong performance from its core advertising business, the family of apps.
Yeah, that engine is firing well. And those profits are funding two things simultaneously: huge, long-term, loss-making investments in the metaverse via Reality Labs, and now also significant direct returns to shareholders through buybacks and dividends.
That sums it up pretty well. It's this balance between exploiting the present and investing heavily in a potentially very different future. Their success hinges on keeping the ad business humming while making real progress on RL.
And AI is clearly becoming central to both parts of that equation, enhancing the current apps and powering future ambitions.
Absolutely. AI, the pace of metaverse development, and how regulators respond, those are the key things to watch.
Definitely. So here's a final thought for you, our listener, to chew on. With Meta pouring so much into Reality Labs and expecting losses there to increase next year, what specific signs or milestones would you look for in the next few years to judge if that massive metaverse bet is actually starting to gain traction? What would tell you it might have long-term viability? Something to think about. Thanks for joining us on the Deep Dive.